So those dropped from more than 40 million in 2019 to 29 million in 2020, and that includes depreciation, etc. So that is what's behind being able to achieve an EBITDA positive 1.4 million for the full year of 2020. And we achieved very positive cash flow, so very happy about that to maintain a strong balance sheet. And the strong SPS sales performance, I think, is a tremendous achievement, as I said, in light of COVID travel restrictions. In particular, the fact that we were able, in spite of all of the things, all of the restrictions, to grow our SPS revenues in China by 38% between 2019 and 2020. So again, an outstanding result there. We've also made very good progress on the Ivory Coast project. Having received $60 million in Q4, this project will now be cash positive for us from this point on. This is a very important project for us because we're going to be building a water treatment plant in Ivory Coast that's taking very unpleasant, very polluted lake water, very nasty bacteria in it, and turning it into drinking water, which would be capable of meeting the needs of 1 million people a day. So a very, very good international reference for us. But also, as we've talked about with the shift in strategy, the Ivory Coast project is the way that we have the cash flow and the profitability to achieve that shift to emphasize sales of smart product solutions. So just a reminder on the strategy that we articulated in November, we're focused now on achieving MABR sales. Those are our wastewater treatment solutions in China and Southeast Asia. Why these geographies? They're the fastest growing, where we've already got good partners and see the prospect for more. In addition, we're focusing on NeroBox, our desalination solutions in the Middle East and Southeast Asia, and of course, excellent execution on the Ivory Coast water treatment project. All of this, as we said in the release, is intended to take us, after the Ivory Coast project is finished, to a business model that would be on the order of 35% gross margin, about 20% operating expenses, and thereby delivering a 15% EBITDA as we grow profitable revenue sources. So, as we said, as I said before, COVID headwinds do continue. They haven't gone away, and we really don't know quite how long they're going to last, which is why in guiding for Smart Product Solutions revenue in 2021, we've given a pretty broad range, $35 to $50 million. I hope the headwinds don't last all of the year. If they did, then that might mean we'd be more toward the lower end of that range. But we're going to do everything we can to exploit the growth we have. What's very, very important is that our volume partners, our existing volume partnerships that we've publicized in China, there is a substantial amount of volume from that anticipated in those announcements that remains to come for us, and we see no change in the expectations of those partners in deploying that volume. So that's a very important part of our story going forward. In fact, I would say partnerships are the key to our future in every geography. We certainly want to manage, maintain, and build those 3 volume partnerships we have in China. We want to form new partnerships, ideally even at the national level, where, in other words, a partner we would have in China would have national scope and not just at the provincial level, and thereby inferring much larger sales. But partnerships are also very important for us to build our business in Southeast Asia, in the Middle East, and indeed elsewhere. So all of these geographies, partners will continue to be very, very important for us. And the reason I say that is because in the early days of selling NABR, it was a brand new technology. We really had to go and sell it directly to the customers. Otherwise, they would have far too many questions for somebody that was more at the partner level to successfully sell it. But the fact that we now have 235 NABR plants out there means this is really a proven technology, and thereby something that's much easier for partners to sell. And of course, as we've seen in China, those partners tend to come through with tens of can help us to offset the cost of businesses in those geographies that we would say are not in our core focus for the future. And then one final thing I'd like to say is regarding recurring revenue. Those of you that have followed the story for a number of years know that this is something we had talked about a lot in the past, but maybe haven't referred to so much recently. We still believe that there is a tremendous opportunity to sell water or wastewater treatment by volume instead of selling capital equipment. And in fact, this is a far more attractive business model for those geographies where we feel it's well suited. And we feel that the best opportunity we have there most likely is around water reuse because of the very low operating cost of our MABR technology. But indeed, we do in certain geographies have a good case for desalination. As you know, we have a recurring revenue project already in the Bahamas operating successfully. So that remains an important thing for our future. But in addition, when we talk about recurring revenue, another element that you'll be hearing more about regards operation and maintenance contracts. Because we have such a large number of plants deployed, and because we collect data on those plants, we have a tremendous amount of operating data. And thereby, we're in a very good position to sell value-add services to our customers to help them operate the plants more efficiently and more profitably. So that's another good source of recurring revenue. So that's really, I think, a good snapshot for me and where we've been for 2020 and where we're going in 2021. And I'd now like to turn the call over to Francesco to give a bit more detail on the financials.
Thank you, Richard. Fluence an audited revenue of $23.5 million for the quarter, $96.5 million for the 2020 fiscal year, up 58% of the prior year. This strong growth was underpinned by the Ivory Coast project and the continued growth in SBS sales. While USPS sales in China are tracking at a lower than anticipated pace, primarily impacted by disruptions from COVID-19, Fluence achieved overall revenue growth of 87% in Q4 2020 compared to prior quarter, and 23% in the prior year. All research and development costs were expensed over the year, with overall operating costs reduced by 28% from the prior year. Fixed costs as a percentage of revenue are 30% in 2020 compared to 66% in 2019. Underlying EBITDA for the financial year was positive $1.4 million compared to a loss of $23.6 million for the prior year. This is the result of several factors, including the margin contribution from Ivory Coast project, the growth of SPS sales, and the reduction in fixed costs. On the summary financials chart in today's release, we refer to underlying representing the EBITDA. The amount of $11.8 million in the normalization line for 2020 mainly includes non-recurring write-down of the substantive asset on the balance sheet, which is excluded from the underlying EBITDA. Moving on to cash flow. We received $75.3 million in payments from customers during Q4 2020 and $122.4 million for full year, with net cash from operating activities of $33.4 million in the quarter and $22.2 million for the year. In the same quarter, the company invested $32.9 million in short and long-term deposits, of which $27 million is applied as a collateral for bank guarantees for the Ivory Coast project. The cash and cash equivalents were $31 million at the end of December 2020, compared to $31.2 million at the end of September 2020. Finally, Fluence had a contract backlog of $226 million at the end of
Operator, would you mind just reminding our callers how to submit questions on the web interface, and then we'll go to the Q&A.
Thank you. If you wish to ask a question, you'll need to do this via the webcast. Please type your question into the Ask a Question box.
So, Francesco, I see a bunch of questions on China. Why don't you let me tackle those? And I think there's some of a more financial nature you may wish to address. So let me have a go at some of these. So first of all, there's a question about how do we manage business risk, particularly given worsening relations between China and the U.S. and Australia. Very good question, because certainly our China business is extremely important to us. And I think what's very important to say is two things. First of all, we have a completely self-contained team in China, which is Chinese. We have our factory making the MABR for global needs. We have 2 assembly facilities, and we have 2 sales offices. These are the people who have direct relationship with the customers. In addition, recall that the MABR technology, which is what we're selling in China, was invented and continues to be developed, cost-reduced, and evolved in Israel. So in the mind of our Chinese customers, and this is very truthful, this is Israeli technology which is being deployed. And I think by that means, we are effectively avoiding, I think, the geopolitical issues. I think there's also some questions in regards to China about what's making up some of the sales there. Our China sales are focused at the moment on MABR in a number of forms. When we started selling plants in China in 2017 and 18, it was really kind of a mid-size set of units. These would be treating wastewater for maybe 1,000 to 3,000 people. They'd need to be going to a reasonable size installation. Then we introduced Subray, which can do larger greenfield plants, such as we've been building up in the north in Liaoning province and elsewhere, including in Jamaica and the Philippines. And then more recently still, we came out with the Aspiral Micro, which can go down to literally a few households worth of wastewater. This gives us a very broad spectrum of products, and it's very applicable to the market in China, where all 3 of those segments, small scattered installations, mid-size, and then the larger greenfield and central plant upgrade market, are all very, very good opportunities for us. So we anticipate that there'll be increasing orders in all 3 of those areas. We're already seeing, I think, very good uptake for the Aspiral Micro. And I think maybe, Francesco, why don't you let me give you a turn here and answer some of the questions.
Yes.
Questions on restructuring charges and thanks, something like that.
So, I will start with there are several questions on San Quintin and what that write-off means for revenue and accounting done in past fiscal year. So San Quintin has been accounted for according to FLC 12 section service, which allows the company to capitalize the cost incurred during construction and all the other costs incurred on the project. But instead of reducing the cost, requires the capitalization to go to the revenue line. So cost incurred is offset by the revenue for the same question about short-term and long-term investment that we reported. Those are mainly bank deposits that are restricted as a collateral to bank guarantee issued by the company in favor of the client, mainly in relation to the Ivory Coast project. This is typical of those large construction projects in which there are performance of the supplier, in this case, in contractor influence, and the beneficiary is the customer. Those collateral will be progressively released during the next 18 months while we execute the contract and we deliver the work to the client.
Great, thanks. So I think there's also a question on the $7 million restructuring reserve. I think maybe if you could unpack that, that would be helpful.
Yeah. So we disclosed that explanation in the past as a potential cost of redirecting the strategy of the company. Some of those costs have been incurred or accrued in 2020. We don't have those costs included in our financial, and those remain still future related to developing new channels to the market, developing new geography, or reorganizing existing business that was today the Fluence Group.
Great, thanks, Francesco. Appreciate that. And I think there's also a question about how the Ivory Coast revenue is likely to come in. How much was it 20, and what do we think for 21 and 22?
So in terms of revenue, this is a 24-month construction contract. We started actual construction on January 4th. That set the clock for the 24 months. So most of the revenue, if not all of them, will be recognized by the end of 2022. We might have some, for sure, most of the costs will be incurred by that fiscal year. There will be some activity related to the startup of the plant going into 2023, but at the point, what will be left in terms of revenue recognition will be less than 5% of the total value of the contract.
And can we give any detail on what we incurred in 2020 in terms of Ivory Coast revenue?
So in 2020, we recognized $35.9 million of revenue. We incurred about $27 million of cost. So the revenue contributed in terms of gross margin for the difference between those two numbers. There is something to be clear about the gross margin versus the contribution to the EBITDA. Essentially, in 2020, most of the costs, the project costs, were related to engineering. So it was related to our engineering of employee of the company and other charges that are part of our fixed costs. So the contribution to the EBITDA was higher than what we will expect going forward when during construction most of the costs are related to equipment and subcontractors.
Great, thanks. So I see a number of questions here regarding SPS contract announcements, partnerships and discussions, and what is underpinning our guidance. Maybe taking those in reverse order, the guidance we've given, it's certainly true that we anticipate further growth in China. I believe we disclosed that China revenues were up 38% in the U.S., we have 57,000 water utilities, most of which service fewer than 3,000 connections, and where there's really no strong market incentive to upgrade to more efficient technology. So we'll make progress in the U.S., but it's a modest investment for us because it's a slow-moving market. In China and Southeast Asia, and of course the water crises in the Middle East create a sense of urgency which allows us to exploit the fact that we can deliver infrastructure, we believe, faster than other people, and that's what we believe wins us partnerships and the kind of volume orders that we have. Just take it easy.
Did you see a question on the backlog?
Yes, far away, Francesco.
So there was a question about what else is in the $68 million backlog that is not at the cost. About 17 million of the 68 are related to SPS. About 2 million is ongoing contract on recurring revenue in relation to DOT. And the balance are legacy CES contract. What I want to highlight on the backlog is that $17 million backlog for SPS is not an indication of any less future prospect of growth for this type of segment. As we said in the past, being the product-based business, SPS doesn't sit on our backlog like a large contract like Ivory Coast that will be and has been in our backlog for several years. The turnaround, the book-to-bill on SPS can be as short as 3 months. So what we have in the backlog will show, if we want to say, less than 12 months revenue recognition cycle.
Great. Thanks, Francesco. And I see a couple more questions on the SPS announcements and updates to guidance. Yes, it's certainly our intention to revisit guidance and provide a narrowing of that range, which is, we understand, very broad at the start of the year here. And there's also concern that we don't announce every SPS order we get. I can tell you that our partners in China, just having glanced at the orders that came in Q4, I think there were probably 20 or 30 orders, from those partners. Varying sizes. Some of them were full treatment plants, some of them were components. The point is, if we announced every single one, I think it would be faster than releases. So we would certainly intend on a quarterly basis to give an update where we are and to potentially revisit at least at the half-year mark the guidance around the fairly broad range that we've given for the smart product. So I think that's about it for the questions. And I just would like to thank you all very much indeed for joining the call, and encourage you to reach out to the company for those whose questions we were not able to get to, or for whatever reason we overlooked. We will get back to you by email, and happy to discuss those also offline. So thank you again very much indeed for joining this